Hi, this is Zach with the Bulletin Board Heroes here at Vox Markets for Thursday, the 23rd of December. Just 2 sleeps to go before Christmas. Starting off with Amil Minerals, which looks like it may be due one of its 4 to 5 months spikes that you get. We've had them, I suppose, over the last couple of years on that kind of frequency. Probably overdue one now, but rising trend channel there from the beginning of the year for the channel around 1.6 pence, and above that looking for a spike towards 2 to 2.5 pence. The last one was back in August. Only back below 1.5 pence, really cancelling the idea of a recovery here. It's interesting that the shares went into really oversold mode back at the end of last month, and that was the most oversold they've been since March 2020. So let's see. The technicals can deliver something there. On to another stock which has been on the back foot of late, Block Energy. Here we can see that we've had the benefit of clear bullish divergence, beautiful uptrend, rising support line there in the RSI window, bear trap, and then a break back above the old April 2020 low. That was around, what was that, around the 0.9 pence level, above 0.9. Perhaps looking to see the shares at least fill the gap there at 1.33 pence, which could be done in the next few days. Best case scenario may be to fill or try and fill the gap there from October between, 1.95 and 2.2 pence. So plenty to shoot for there at Block at the moment if you are into bullish divergence. Not such a fraught situation at Sinocode, been one of the better performers of the past year. Here you'll see we see we're in the aftermath of a rebound, bear trap rebound off the 50-day moving average at 19 pence. Above that, looking for 30 pence at an April 2020 resistance line projection. So the other points to note, or the point to note, I suppose, here is the way that we've had unfilled gaps to the upside in October, back in July, and then we had the filled gap back in April, so this looks like a stock in a hurry. Moving on to Capricorn Sunrise, which is following on its recent recovery, or yesterday's recovery. Hits that initial target we had there at 5.2 pence. Above 5 pence, looking for 7.5, which is an April 2020 resistance line projection, perhaps as soon as the end of next month. You can see that the shares have tended to rally off oversold territory, so just like they did in this week, they did actually start a move higher from September last year and also in March last year as well. So the RSI indicator pretty reliable there. Moving on to Verge, where the company has been a very busy one this year. Share price has perhaps not been as dynamic as it could have been, but there's always 2022. Here you can see that we've got a rising trend channel from March last year for the channel there at 22.5 pence. Above that, we're looking for the low 30s initially, which was November resistance around 32, 33 pence. Best case scenario over the next 2 to 3 months as high as 45 pence, given that we've had a third or fourth test of the low 20s. I think that's probably enough now in terms of testing out the strength of the shares. On to Greatland Gold, which remains still near the low end of its recent range, a rather painful pullback from the turn of the year, which was not very friendly. But the current situation is that we've had an initial December bear trap, bullish divergence in the RSI window as well, which I could draw in. So the lower lows for December, but higher RSI trace there. View here is that we should, at least, given that we've had such an extended decline and also the bullish divergence, we should be able to retest October resistance in the low 20s, perhaps by the end of next month. Moving along to stock which I think I looked at a few days ago, looking rather more encouraging here at Oberkaa. Here we've got a rising trend channel from back in March last year, like so many stocks. Top of the channel heading for 22 pence, and that's valid while we hold above the 12 pence area and the floor of the channel. Moving on to Pireos, which had a great update via its investee company, Pluto, which looks as though it's really on the front foot and doing rather well, maybe better than most people expected. Here you can see that we've broken that line of resistance there from back in April. That's around the 6 pence level, and above that looking for at least the 200-day moving average just shy of 9 pence, which is also post-July resistance for the shares. After that we could see a more serious push to the upside. Rambler Metals managed to recover its composure in the autumn. Here we've got a situation where actually it's looking quite encouraging. We've got that sort of a broadening triangle there from back in January. The resistance line projection actually heading up towards 94 pence, which seems to be rather ambitious as a target, but I think that it looks as though we could easily retest the best levels of April, so that's through 60 pence. And at a minimum, I suppose, 45 pence, which was the November peak. Nice double glance off the 50-day moving average, rising around 30 pence, and so then 45 and then 60 pence. On the cards maybe for the first couple of months of 2022. But good that since that turnaround in November, the shares have remained above the previous resistance area around the mid 20 pence zone. So that is encouraging on Rambler. Good news with REDX Pharma today, and it's money from AstraZeneca. Here we've got a rising trend channel that's been in place since July last year. Top of the channel heading for around the 140 level, and that could be hit over the next maybe 3 to 4 months. A good start in terms of the unfilled gap to the upside through the rising 200-day moving average. In fact, we've had 2 of them. So it seems that somebody guessed rather correctly that there could be positive news from REDX today. And as I said, 2-3 months, or 3 to 4 months rather, on the upside there, while we hold above the 60 pence area and the first gap, which was earlier this month. Finishing off with SDX, and here we can see that the shares have broken that falling wedge. It's been in place for much of the year. The line in question around 9 pence, above that on a weekly close basis, looking for 12 pence initially, maybe over the next couple of weeks, and then up to the 200-day moving average in that August gap at 13.5. But I suppose the main message here is we are in recovery mode. We've had an exhaustion gap and a gap close reversal. We've also had bullish divergence of the low for December, but equal RSI for this month in the oscillator window. So things may be finally looking to turn at SDX. That's it from me today. More updates to come.